Hello, this is Nicole, and this video is about how I'm managing my winning collared position in Bitmine. Last week, I opened a collared position in BMNR, otherwise known as Bitmine Immersion Technologies, and I did this because the call skew made the hedge attractive. Since then, the stock has exploded higher. My short call is close to being challenged, and I'm sitting on a great winner. Here's how I'm going to manage it. Before we get into the management details, I want to go through a quick snapshot of Bitmine so that you can understand why I might want to hedge this position. Bitmine is basically a stock market proxy for Ethereum. The company holds over 833,000 Ethereum, which is the largest public ETH treasury in the world. And when Ethereum moves, BMNR tends to move even more. BMNR funds the purchase of additional Ethereum by selling shares, which allows the company to grow its ETH holdings, but also dilutes shareholders. BMNR's stock price is higher than the actual Ethereum value it holds, and this difference is called the premium. Let's talk more about this concept of premium. Right now, BMNR trades at a big premium to the raw value of its Ethereum holdings. And here's how to figure that out. First, you want to calculate BMNR's total market cap, and you do this by taking the stock price and multiplying that times the outstanding shares. Given today's current values, the market cap for BMNR is $6.5 billion. Next, you want to calculate the value of their Ethereum holdings. And you calculate that by taking the number of Ethereum that they own, and you multiply that times the current price of Ethereum. And when we do that, we come up with a value of $3.7 billion. Next, you want to calculate the net asset value of Ethereum per share. So you take the $3.7 billion and you divide that by the number of shares outstanding, which is 109.53 million, and you get $33.78 per share. And when you take the current stock price of Bitmine, which is around $60, and you divide that by the net asset value per share of $33.78, you subtract 1, and that gives you a 77% premium over the value of the Ethereum holdings. So investors are paying almost double the Ethereum value that the company holds for future growth and speculation. And many traders argue that this makes BMNR ridiculously overpriced. In this type of environment, that is going to feed into volatility, both to the upside as well as to the downside. And that's where the collar setup comes in. A collar means I own stock, I'm long a protective put, and I'm short a covered call. The put option limits my downside, the call option caps my upside, and the premium I collect from selling the call option helps to pay for the purchase of the put option. And in BMNR's case, call skew made that hedge relatively cheap. And this is just a post that I made in Discord on August 7th of 2025, where I noticed the call skew and the potential for a nice setup heading into September. So this is a screenshot of the actual trade that I highlighted in this example. And what makes this trade attractive is the asymmetric reward relative to the risk. So because of call skew, I was able to place a collar trade at a very reasonable price, which allowed for more upside potential relative to downside risk. So you can see here the risk to the downside is capped to just over $8,000, and the potential profit to the upside is over $23,000. And that's what we like to look at when we're looking at edge. So this was a position that I didn't mind entering into, especially since my longer-term view of Bitmine is bullish. So if the trade didn't work out by September, I was okay holding on to those shares, recollaring the trade, and looking at how that position would behave over the course of the next several months, if necessary. So this is what happened. I entered into the trade on Thursday morning at around $41 per share, and the stock absolutely ripped to the upside after doing that. And that's not because I knew anything, I just got lucky. So BMNR ripped higher over the course of the next 2 trading days. My short call strike is now in play, which means if I do nothing, I will give up additional upside while also sitting on large unrealized gains that could evaporate if I don't make any adjustment. So here's my adjustment plan. In this scenario, I'm going to roll both the short call and the long put up in the same expiration. This locks in gains, reduces downside risk, and keeps room for more upside. It's basically like ratcheting the whole collar higher. So let's hop into the ThinkOrSwim trading platform here and look at my position. As you can see, I'm long 1,000 shares of Bitmine, at a trade price of $41.81 per share. The entire collared position is showing an unrealized gain of just over $8,500. I'm short the 65 strike call and long the 35 strike put. And taking a look at the chart here, this is a 1-year daily chart, and you can see the price appreciation there. And if I open it up to an hourly chart, we can get a better sense of what kind of price movement has been going on in this trade since I put it on. And what can we do to eliminate downside risk and lock in some profits? One thing I'm going to do is I'm going to roll the calls up, and I'm going to do this by executing a vertical call spread where I'm going to purchase back the 65 strike call and sell the 70 strike calls. And I have 10 contracts on, so I'm going to do that times 10. And I'm also going to sell the 35 strike puts. And in this case, I'm going to buy the 55 strike puts and move that put price up considerably to lock in gains. And this is going to cost me $8 and roughly 58 cents per contract. I'm doing that 10 times, so it's going to cost me a little over $8,500 to do that. And I'm going to deselect that adjustment. And when I highlight the profit and loss at expiration for the position as it currently stands, we can see that I still have downside risk. And that downside risk is approaching $8,000, and my upside is capped at around $22,000. When I select the roll, we can see that the downside not only is eliminated, but I've locked in a minimum gain of just over $3,500 on the trade, and my upside is capped at about $18,000. So that is something that looks attractive to me, and I went ahead and set that order through, and we're going to see if we get filled. And I'm just going to try to work the order here, but it looks like I don't need to. I got filled at $8 and roughly 98 cents per contract. And we're going to head back into the monitor tab where you can see the adjusted collar position. So the overall BMNR position that I have is long 177 delta. I'm long about $28 in theta. Vega is -6. And that is what the position looks like adjusted. So here are some key takeaways. Collars aren't just defensive strategies. When you use them with favorable option skew, they can be very efficient ways to play volatile stocks while keeping your risk in check. And once you get a winner, rolling up is a great way to bank some profits and stay in the trade. Please like, share, and subscribe if you found this video to be helpful. Drop any comments you have in the comments section below. I'm interested in hearing your experiences with collar trades. As always, thanks for listening and be awesome.